Hello traders, this is Alex with the StockMatrix program. We did have one new trade this week. I think it was the only trade we had this whole week, and it was on Friday, which was Coke, K-O, went short. Again, another victim. Here's my X account. You can review what we go through here. Again, these are the Coke trade and whatnot. So anyway, you got a place to go to review it tomorrow, next day, same day, whatever. So it's definitely, I just published this, so let's look at the actual data here. This is our statistical page, and you can see with the weekend we have a lot of annuals coming in, some important ones. 2020, so that's kind of the I guess you call it the pre-COVID break, which is important to me. Mostly lows, right? And there's a few highs. And we also have quite a few 45. Again, these are 45 zones, 45, 90, 135, 180, 360, so on and so forth. So now some of these have a few days left. Some of them are a little more current. So, but anyway, you can see them here. Apple's definitely got some activity across the board. That came, well, the 23rd is actually going to be Sunday. So again, it could be Friday or Monday on the chart for a lot of these actually. Another one is that ED. Again, one of the only Sebastians left that actually made a new high yesterday, Friday. So that's, again, kind of had a poor close. We do have a bull trap on that. So anyway, let's look at Coke. Again, this is the chart. And you can see that it just had an outside event. It did knock that out. So that got us short again because we, in our algorithm here on the stock matrix, we use the three, right? So the three boxes or three columns. So it did knock that out and we did go short. Now our stop is right here. I put it up here because I didn't want to mess up my time zone. And that was close to 180 degrees. Now again, if you notice that it started here, right? But again, we kind of had a twin tower top. So it could have been over here. So close enough, right? Again, to give you an idea, we did square out the time and price from this low, the COVID low. So, and again, that also came into play for these highs. So, and again, kind of got a double top, right? It did not, on our chart, did not make a new high. On the lunar eclipse, we broke it past the lunar eclipse. Now, again, we're today or this week or Friday was this first day of spring, the spring equinox. So again, as my previous videos, I was kind of thought this day, this timing, this moon period, quarter moon period was going to be important because of that spring factor. Now the lunar eclipse, of course, comes on Friday. 29th, I believe, is Saturday. So we're going to see a possible, again, Friday, Monday sequencing. That'll be pretty important. Now on the system, again, this is our only trade that we had, but you can see we're pretty much short across the board, which makes me a little nervous. Now either the only one long we have is ED, the one that made a new high. But again, my experience tells me this is either a possible low as an index, right? It's I guess oversold, if you want to call it that. We're kind of oversold as an index goes. Now, if it would gap down Monday, that would be pretty ugly. If it closed, especially a bad close on a gap down, that would be pretty ugly. And maybe a true test of whether we're just in a corrective mode or in a true bear. We'll review some of the daily charts here in just a second. I'm going to thumb through, though, the stock matrix charts, and you can see there's NVIDIA. The stops are still a ways up there, so if it would be a low in here, we ain't going to make much money, even though the system has a bunch, shows profit, right? But you don't make that until you lock it in. Now, there's a few, Google's one that we're locking in profits unless it gaps above us. Microsoft, a little profit. Again, because we got in here on Amazon and our stops down here. Now, if it sits here for a while, at least another week, we'll lower these stops down. So another week of quiet time will definitely lower the stops much lower. Apple still a loss, right? If we get stopped out, Tesla will be a profit, but still, leaving a lot on the table. Of course, Tesla dropped 55% for crying out loud. Lin, again, kind of a secondary event, so could be kind of ugly if it would continue down. ED is our only one that's friendly. Again, made a new high, and kind of I did actually take this trade. A few weeks ago, I did a video on bull and bear traps and how I trade them. I did take this trade. I bought puts, out of the money puts. I believe I bought 105 puts for $100 or something for a month out. Now, again, that's just I'm fighting the trend, so I'm trying to make 50%. So anyway, you can review that video on the bull and bear traps. Now, again, obviously Adobe had one as well, but again, pretty ugly gap down. Again, a gap down. But we're on to the eclipses here, so I'd be interesting to see how that turns out. IBM kind of had this gap that was friendly, right? But it busted it here. So now the stops are up here. Has to make a new high before we get stopped out. So kind of, obviously you could go down and fill the gap. Makes sense a little bit, I guess. Here's the previous solar eclipse. So now again, we're coming into a new one. So this is getting less relevant as every day that goes by. A BK kind of a busting, here, big poke up, big outside event with follow through. So here, lunar eclipse, solar eclipse. Here's the projections from those lows. We missed the lunar by 1 box, and solar is yet to be known. Procter & Gamble, poke up, again, a safe play, but a chopper, right? It really hasn't gone anywhere. JPM, again, bull market, turned into a quick bear. I believe at least 15% down. I'll have to look. But again, you can see that we won't get stopped out of this position this next week. This next moon period, it'll be a loss. So again, these jab lows are kind of intriguing to me. Coin, again, we'll make money there unless it gaps through us. Cintas, again, another corrective trade, about 62%, filled the gap, uncovered close, below the 1-to-1 trend line and back down to support on Cintas. Let's now review the daily charts. Hang on. Okay, here's the video. This is the daily chart with our annuals plotted on there and some other stuff. You can see that we had the annual came in. This was a low from 2020. I'm going to mark these down as we go. Both, I assume, highs. Now, if we would reverse this and go up, I might flip these around and put them down below for support. I'm assuming that it's going to continue down. Let's go to Meta. You can see that we did have an annual here, and the market definitely responded in kind. We did have, this is the solar eclipse, right? Anyway, we have another annual coming in next week. Again, just a pretty ugly event. Meta was the bull of bulls, and for some reason, out of nowhere, it just turned bearish. Let me see, it dropped 22%. So a corrective mood, I guess. Back to the solar eclipse, right? See, that's what I projected when we were coming down on my other videos when we actually went short. I go, well, this is the zone that I thought it would break to, and we did go there. And you can review that. I mean, again, no big deal, right? You still got to make money on it. I called a lot of times and prices in my days in the 4 decades of doing trading, but that don't make any difference. Thousands of time and prices called, but you still got to make money on them. So anyway, this was a logical place for it to go. It fell to that area. The new solar eclipse will represent the next level for the next 6 months. Here's Coke, the one that went short. You can see we failed to make a new high, right? That was a suspect to me when I was doing the video last weekend that something was up, right? It should have made a new high. There's no reason not to pop the stops. Well, now we drop down. This blue line is a speed line, a slope, right, which is different. So it's from this low, it's a 2-to-1 slope, and this is a 1-to-1 slope from the high. So again, definitely, slope. You have to do the math on that. It's a little different than actual a 1 day over per 1 bar up, right? I mean, it's a little different than that. It's based on the slope of actual. It's based on the slope is based on the lows or highs, the actual number, right? So that slope is mathematical. Anyway, that's here and there. I don't want to get into that, but and you can see we're coming into 11 days over from this high, which again I use 11, 22, 33, 55 when it's bar count, and then I use calendar days like 45, 90, 120 of the Gann stuff, the Gann wheel when I'm talking calendar days. So pretty important coming into this zone on Coke. Google, you can see we had a bunch of annuals, all caused resistance. Had no annuals here, and it kind of corrected back, and then poof, down we go. We had 2 of them coming in here, caused the gap down. And now resistance, right? We have another one here that I can't claim that it's a high yet. I might bring it down to the low if we do go higher. So pretty interesting, ugly chart, really. Again, just a correction though so far. There's a 1-to-1 actual trend line. So that's, here and there, but that's definitely support and resistance now. So again, you can see just by dragging it over that pretty important, right? So again, I don't want to get too into the weeds on that. That's not my forte. We do have, this is from the solar, the 25th will be some activity. Microsoft, again, another different look, a little older because it made its secondary high when the rest of them were making their highs. So it's a little older break, and it's a secondary, right? Because again, it was the high. Again, just telling you it was heavy. If something was different and made me a little more cautious, and again, did have this trap down here, which I did trade, by the way, on my bear trap option play. Amazon, same situation, poked a new high, now in a bear. or I should say corrective mode. We don't know if it's a bear. Again, everybody has a different determination for bear, right? Well, you break the uptrend line, check. This uptrend line I got broke, right? Yeah, some people say it's got to be 38%. I don't care. To me, this is bearish. It's more than this one, right? Again, to me, something's different. So now here's a bear too, right? Well, how did people classify this as bear? Because it broke 50%? No, because it broke the uptrend line, had the topping action. The length, the time is long. We can have a bear and not have a price break. A bear could be time break. This isn't bullish. This sideways action here, 2 year and a half of sideways. This bull trap is not real friendly either. And then we broke the swing to the downside. Could have bounced back up. If it was bullish, it would have popped this out. It had a bear trap and go up. So something's different, right? This action is a little more consistent, but we even broke that pattern. Apple, again, I could talk charts all day. Somebody needs to tell me to shut up once in a while. My wife does. We got a kind of an ABC kind of correction. And again, a sloppy chart. Again, that's a problem when you get a market that's fully loaded with investors and small and large investors and the like. Tesla, again, 75% or 55% break. Of course, this one is 75%. So it's not unprecedented. That's how it trades, right? That's why history is important. Again, bull market, once it turns into a bear, it tends to be pretty ugly. That's just the design of how it is made up. Maybe it's got more commodity cyclicalness in it than it does stocks. Because again, it creates a product, so commodities do have a bearing on it. Here's Lynn, again, kind of a head and possible shoulder top. I don't know that, right? Let's look at it on a weekly. Definitely can see the head and shoulder potential, right? Here's your neckline if you're a head and shoulder guy. So it's going to be pretty ugly if it breaks the neckline. ED, again, the only true bull we have left, just made a new high, and it definitely is but again, we're just barely above this previous shoulder, right? So again, it's basically sideways. I did take this trade. I did buy a put, out of the money put, 105 put. So again, it's a typical trading market, I think. We had a bear trap low, and now we have a potential bull trap high. Adobe, again, a gap down, gap down, gap down, gap, 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 gap. Stupid gaps in this chart. I never would have taken Adobe if I'd have known it. All it does is gap. But you can see we're coming into 66 market days over, 132, which is kind of the cycle of that. Comes in here on the 26th. So definitely got some stuff. Then it's I think it's one of our oldest bears that we got. Highs were made on the February 1st. So again, watch out for the first. You can go back to, again, I'm giving you a little chart lesson here. You go back to the 1st of August. That was this big high right here. Let's go back to September 1st. Again, I'm just pulling these out of the air. That was this high. Let's go to October 1st. That was a dud. Let's go to November 1st. That was the day before the low. Again, that's just how chart stuff is, right? It's simple stuff, not brain surgery. You watch those, and they'll reward you, right? Same way with lows. Now again, the all-time high was back back in COVID. So, and that had the high day was the 19th. You can look at all the 19ths, right? Again, there's a high here. January 19th was nothing. This was a low on the 19th. This right there. Again, no big deal, right? But let's go to current, and there's the 19th, which was in the middle of this congestion rim. So move on. IBM off the highs, kind of filled the gap, which is interesting. Held support. We kind of had a trap action high. We have this is a trap action low. I did not take this trade. I did take two of these. I did the bull trap here, and then I got out right away, and then I did the puts here and did the bull trap, right? So and now I didn't do this one, though. I got tied up in some other ones on my trading account. Here's a BK. Again, a safer play. Did make new highs a few weeks back. It did have a corrective low. It's a little faster than this time break here. Again, so in this, this is a representative of that, and we're way below it. Price ahead of time. So the parallel channel, right? That's, I guess you can draw it in. This is the parallel channel, right? So you can see that it did hit it. So I don't know. Again, it's traded. The safe play is still in safe mode. If the Netflix of the world continue to drop, these safer plays will be of value. Now Procter & Gamble's a safe play, but it had some nasty. This I call this a drowning man, right? It tried to go up, and then it tried again, and then it just drowned it and failed. So this activity is a little bearish to me. Now we did have some timing in here. It's just in this downward slop channel. I guess since it did not make a new high in a bull trap, I don't think it'll go down to this level, or maybe even, again, this low is probably makes sense a little bit. But it's such a sloppy action, I don't want to be involved. Here's JPM. Here is again, a bull market turned to a pretty harsh, actually broke swings, right? So something's a little different. But again, there was an uptrend, and then it had a bear trap. So I think I did take this trade, actually. I did take this trade and got out in a few days, made 100%. When I go with the direction of the trend, I take 100%. If I go against the trend, I only take 50%. Again, review the video from a couple weeks ago on the bull bear trap trading method. Here's Coinbase. Again, another pretty ugly chart. 50% break, not quite. Just fell short of it. We kind of didn't have any big, massive pop back. Makes me feel a little like it's not done, right? Again, this action is pretty pukey. Should have went up here and popped. Got people really wound up. But this little mild corrective zone makes me feel like we got some more gut wash. Now, again, these other markets that have broke 55%. Again, not just the ones that I trade, but other ones. 55% has been kind of the key trade zone. So again, if we go down 55%, that would project it down to here. And then it's so close to this low. And of course, that's the old solar, right? It could definitely, since we had a bull trap high, right? Because it popped that out. I would expect a bull trap low, right? For every action, there's an opposite but equal reaction. Here's Cintas. Again, the bull of the century turned into the bear after they got the public involved in the split. Poof, down it goes, bear market, right? But this action kind of, to me, is a long-term bull. These breaks like this that happen quick and don't follow through. Well, why didn't it keep going, right? Why did it stop? So this makes me kind of believe that, we could possibly knock this out. But I think eventually it'll be a slow climb back to the upside, maybe take a year. So I'm not too anxious on buying the Cintas in my logical brain. Now, again, the StockMatrix program, the algorithm doesn't care about any of that stuff. Nothing. Here's the S&P chart. Here
Refresh
is
finished.
the Dow chart. Again, you can see we're back to the solar eclipse. So again, not really bearish, not really bullish, just a neutral stretch, which is okay. That's the most, if that's all you get is sideways action and your time break. Again, you got to break. The most important part is the time break. Price break can happen, and it probably does a lot of times. But these time breaks are just as important, if not maybe more bullish or bearish, right, depending on which side of the chart you're on. But this, to me, is a time break, which is key. Now, of course, we could slowly top out and, drive down, and we'll look back, oh, yeah, that was a topping action, which it could be, right? A bull trap, poof, turned into this ugly event. We had a bear trap here, right? Stoked all those lows out. So it's definitely set up to go higher, but it doesn't have to, right? So the next week was pretty key. Finished. Here's a NASDAQ mini. Again, pretty, this was the previous break. So we broke more, but the time was equal. So you can't really claim that it's a real big bear. Again, we're back to the solar eclipse, just like the Dow. Here's the previous solar eclipse. So now we're going to have a new one coming in next week, or the 28th, next Friday. So I don't know. It really hasn't done much. Now, as an overall, if I draw a line on these solars, you can see an obvious trend, and you can see the parallel channel that we're in. So anyway, here's the QQQ, kind of similar to the NASDAQ, a little different. Again, you can see the trap action that we had back to the solar eclipse close. So not much to report there. I want to look at a couple commodities real quick. This one is the euro, which is opposite of the dollar, which I think is pretty key for the commodity world. You can see we kind of had a long-term bottom with this flag up, this push up. Now, this is the June contract, so a little less critique there than on the spot. But you can see something has changed, right? Looks like we've made a longer-term low, which in opposite would make a dollar made a high. Here's the gold. Again, new all-time highs, got above that $3,000, and is now poised. Again, this little triangular pattern coil, right, was not bearish. Here's another one we had. So it busted out of both these coils. Both were kind of subdued, though, not fly-away markets, still under reserve. And here's the silver. This is a July contract. Again, you can see that it's just a chopper. Has not followed gold at all. Gold is still the kingpin in the world. You know, palladium also is the same situation, which is the tightest stocks out of all the metals, and it's a dud. Um, I want to look at just to kind of give you a full reference here. Let's look at Bitcoin,
Refresh finished.
and you can see, the trap up here and the trap down here. So we've already equaled this out, right? For every action, there's opposite equal action. Anyway, we've done that, so that's not necessary to do much more. But it's still, again, this move up is pretty ugly. It should have been a rocket ship. Should have been up over here, busting everybody out, but instead it's just heavy. I consider that awfully heavy. Here's meal. Here's the cattle, new all-time highs, and then a bad close. It kind of follows the stock market. I think a lot of these big hedge funds that are long the stocks, they have a commodity in their pool. Cattle is one of them. They follow the pretty good. So you can see this market, your steaks are not going to get any cheaper. Okay, I am going to quit there. Thank you again. Everybody have a great weekend and a profitable next week.